Mortgage industry news you can use. Hi, I'm Chip Cummings and welcome to this edition of the Mortgage Minute. A brief look at today's top stories and headlines helping shape your world of mortgage lending. Brought to you by the Mortgage Power Network. Mortgage Power Network, helping you power up your business. Well, it is spring break for many people around the country this week, and no exclusion here. I'm headed down to Florida later this week with my family and for a nice pitcher of margaritas that's got my name on it. But first, I'd like to say hello to one of our newest corporate partners, the Money Store. Mitch and Gloria and all the folks who are across the country from the Money Store, great to have you with us. Congress is also coming back from a spring break, and they've got their plates full. In fact, there's a lot of things going on. But before we get into that, let's take a look at what's happening in today's market. Well, it looks like the Federal Reserve rate cut is starting to have an effect in the marketplace. According to the MBA, refinance applications shot up this week 82% over just a week ago. We also saw an increase in purchase applications, which were up 10.6%. Another bit of good news came from Freddie Mac, who says that the 30-year fixed-rate mortgage average nationwide fell again to 5.74%. That's down from 5.98% just a week ago. But the really big news this week was from the National Association of Realtors, who indicated that existing home sales rose 2.9% in February. That's on top of another gain that we saw last month. That's a good trend. We also saw an increase in condominium sales. Condominium sales showed an increase of 3.7%, the first such increase in 7 years. So what does that mean to you? It's time to get back to business. We like to see trends, and you need to be looking at the first-time homebuyer market. People are starting to come back into the marketplace. In other top headlines, the Secretary of the Department of Housing and Urban Development, Mr. Alfonso Jackson, has announced his resignation. This comes among a growing criticism over the way he's handled the housing crisis from Democratic and other congressional leaders, and also a criminal probe that was announced by the FBI last October, where he apparently has given a little favoritism to HUD contractors. No one has been named yet to replace Mr. Jackson. Well, even though they are starting to come back into the marketplace, don't expect home prices to rise until the year 2010. This, according to Freddie Mac's chief economist, Frank Nothaft. He said, speaking at the Economics Club, that there's a 29% decrease in values in homes since 2005. More than 40% decline in value in areas like California, Nevada, Arizona, and some states that have been really hard hit. Prices have decreased in 46 states in the fourth quarter of 2007 alone. So what does this really mean for you and your business? Well, again, get ready. First-time home buyers have never had a better opportunity. You need to be looking for the opportunities and these brand new markets that are going to enter into the marketplace. This is a great time to educate potential borrowers as to what it takes to be a homeowner and how excess inventory works in the marketplace in their favor. Yes, Congress is back in session, and they're looking for ways of spending taxpayer money on some some repair bills to fix the housing crisis. The first one we have is on the House side, which promises to spend $300 billion to fix the crisis. On the Senate side, we have one for $400 billion. Now, there are a couple of common elements in each of these fixes. Number one is using FHA. The FHA Modernization Act and components of that are key elements in each of those proposals. But they also look at doing some other things, such as more regulation for Fannie Mae and Freddie Mac, tax relief for builders. There's even a part of a proposal that looks at the federal home loan banks buying $160 billion in mortgage-backed securities. That's right, getting into the mortgage security game. But there are some other elements of these proposals that are ruffling feathers. Henry Paulson, Secretary of the Treasury, has also proposed that we combine some of the powers in some of the agencies. For example, commodities futures trading in the SEC. We're even looking at eliminating the OTS and moving it over to the OCC. That'll be a fight, guys. But fight or not, here's the real problem. According to the Commerce Department, we have a 20-year high right now of unsold homes as an inventory on the marketplace. 9.8 months. That's unheard of. We have got to get new buyers into the marketplace. They have got to create a stabilization, or at least a perception of stabilization of values in the market. That's the only way we're going to get new buyers back out into the streets. Now, this provides a unique opportunity for you to get out and meet and greet and educate new borrowers and bring them into the marketplace. In the next 12 to 18 months, you'll have an unparalleled opportunity. So now's the time to get prepared. Yes, market stabilization is good, and one of the top agencies that helps with that is the OFHEO, the Office of Financial Housing Enterprise Oversight. They're the ones that set the limits for Freddie and Fannie. Now, they have come out and indicated that they will not, I repeat, they will not change and lower the cap from the $417,000 in the next several years. That's good news. Right now, of course, we have the exemption, but that's only good until December. Once that exemption expires, many had predicted that because of the declines in the marketplace, we could see a lowering of that cap. Now that they've come out and shored that up, that's going to help stabilize the market a little bit further. Another aspect of stabilization is, what are the candidates going to do if they become president to help our industry? Well, we're going to take a look at each one of them over the next couple of weeks, but the first one we'll look at is Senator Clinton. Senator Clinton unveiled a four-part plan earlier this week where she said, quote, she's going to put in place a federal mortgage auction system where FHA will be able to supplement the marketplace by purchasing problem mortgages. I don't know how that'll go over, but lenders and servicers would also get protection from investors' lawsuits. She's also talked about a 5-year freeze on interest rate adjustments for subprime mortgages. That could have a chilling effect on the marketplace. She also wants to put $30 billion into the hands of cities and states in order to help them buy up foreclosed properties and help eliminate blight. Unfortunately, what are the states and cities then going to do with those properties? Then they're going to have to market them and incur all those costs of marketing. That may be a little bit more than $30 billion. She also wants to create a nonpartisan housing panel which would involve former chair of the Fed, Alan Greenspan, and also former Treasury Secretary Robert Rubin. That'd just be one step in the right direction. Concerns over risk to taxpayers and who's going to fund this are amid some of the concerns with her proposals. Next week, we'll take a look at Senator McCain's proposal. Well, that's all the time that we have. I'm Chip Cummings. I thank you for joining me on this edition of the Mortgage Minute, brought to you by Mortgage Power Network. For those of you traveling this week, safe travels. I'm looking forward to heading to Detroit and then on to Florida and then a little rest and relaxation in the sun. So until next time, I'll see you on the road to success. I'm out of here.